Good morning, everyone, and thank you for coming to this session. It's good to see a lot of you in the audience. This is going to be really interesting because it relates to a topic that I think is of growing importance in economic measurement. So I'm Ed Humpherson. I'm head of the Office for Statistics Regulation, and we are all about statistics serving the public good. And increasingly, we see the way in which statistics serve the public good shifting. And the shift is more or less as follows, that we have a strong framework of national statistics produced by the Office for National Statistics. They're comprehensive, they're comparable, they're consistent, they have that kind of embedded authority to them. But on the other hand, we have a growing need to understand economies on a much more granular level, the granularity of spatial, local economies, but also different sectors. And what is springing up increasingly is a range of approaches to estimate those smaller geographies or those smaller sectors using alternative data sets. And that's what this session is all about. It's definitely not about saying that the current established national accounting methods are flawed or wrong. It's about saying how can we take the strength of those stable, consistent approaches and marry them to newer methods. So we have a really brilliant panel to help us talk about that. And I have learned in just talking to them that at least two of them have deep family connections to this building, and they might reveal that as we go. I know of two. There may be two others who have deep family connections to this building as well. So we have Matthew Bullock, who was one of the founders of Cambridge Ahead, who's going to talk about understanding the economic growth in the Cambridge area. We have Anna Valero from the London School of Economics, who's going to talk from a sort of industrial strategy perspective and sectoral, what sectors are growing. We have Richard Protheroe, who's going to give us the perspective of the ONS's work on subnational statistics. We have Paul Swinney from DataCity, who's going to talk to us about alternative ways of understanding business activity. So that's the framework, and without further ado, I'm going to invite Matthew to give us the opening remarks. Thank you.
Thank you very much. As you can see, I'm not dressed like an economist. I'm actually a banker. And I think they say that about bankers, what they do is they show old light on new problems. So my approach is very much that. It's very down from the high level that you're talking about AI this morning, down to talking about how you can measure and plan economic growth. And mine's based upon my experience of being involved with Cambridge as the economy since the 1970s. I originally brought together most of the technology companies that existed in Cambridge at the time to a meeting, and we started to then think about how we would manage it. And this is really a story about how we created three, in particular, tools that we've developed in a quite pragmatic way in order to manage what has been very burgeoning growth in Cambridge. And the work I'm talking about is based on methodologies from two groups in the university where I'm closely involved as a master and other things. In the Centre for Business Research under Andy Koch and Giorgio Caselli, and another group in the Architectural Department by Ying Jin under previously Martial Echenique. And the work we've done has been really built up over 15 years, very sort of bottom up. And the idea of having this sort of data was launched by Cambridge Ahead, which is an organisation of the largest employers in Cambridge, including the university, obviously, and the hospitals, but really of companies in particular, to understand what was happening in our growth, in our economy, and how we could continue to make it grow. And this group, Cambridge Ahead, which is got about sort of, I think it's 55 members who pay quite good subscription. We persuade these companies to pay, it's now £55,000 a year to get this data produced in Cambridge in detail, both annually and also quarterly. And this data that we have then is given over into a very wide audience. So typically there's about 50 or 60 people come into a presentation in the morning, 8:30 in the morning, from the two economists. And importantly, it's not just the company people, but it's the planners, and importantly, the politicians actually finding out what is happening on the ground. So that's the kind of the background of it. And the result of that data has been really shaping the nature of planning and growth in the area, and was particularly picked up by Kate Barker's report on the Cambridge and Peterborough Independent Review, which was very influential in persuading Whitehall that the Cambridge economy is a particularly unusual one and that they should understand that better. And the result is that as a result of this work, our data is now used actually by the planners in Cambridge in place of the other data that they had before. So the first tool I'm going to talk about is the company database. And this database is an annual census, which is updated quarterly, on 85,000 organizations, companies, research institutes, hospitals, and is pulled in, has done this now since 2010, and is shown in the city. And what's key about it is it's utterly transparent. We know exactly who the actors are, the companies are, what their turnover, what their employment is, and that's an important point because it means that the agents have agency, as it were, in what is happening in their economy around them. And I'll come back about how we tidied up some of that stuff, but by and large, it's very transparent. We know what we're talking about when we say these numbers are moving up and down for different reasons. The data is very clearly located. We go to every single company by postcode, and we then define what sector they're in, and as you know, we'll have more discussion about this question of new sectors. And that is up to 79 different sectors. We look at global employment and turnover and other data as well. We draw in things like membership of some of the networks. We look at in detail the way the business parks are working, and we have got more data now on demography of the population of companies. And you can see in the top right up here, this is kind of actually how Cambridge has been growing across this period versus the national growth in terms of employment. So this is kind of, it's not causal, but it has certainly helped the discussion. And those are the different kind of maps we can take. We can take any map we like. You can go from postcode right up to region, or cut it whatever we like. So the methodology, which is developed by Andy Koch and by Giorgio Caselli, is a manual. All the data is drawn from Companies House with Van Dyck Bureau. We look particularly at companies, but we also look at limited partners, and we look at all those that are lived and have lived across that period. The sectors, I won't go too much about that, but basically the companies, they have their SICs, but they also we ask them what they think they are, because sometimes companies don't put their own SIC into their data. But we then, where we've got new sectors particularly, we've had to use a lot of word search in order to try and define what kinds of sectors they're in. The one particular I remember is like biosciences does not sit in SIC as a problem, and in Cambridge that's particularly a large part of it. We have a group which looks at awkward cases because, for example, if you have acquisitions, then how they show in the accounts. We had one case when ARM, when the first iteration was done, we had ARM in the data twice, which is a bit of a problem because it was a rather large company. And we have a group who will look at eyeballing. Just look at the data and just say, that looks wrong. We know, because we know enough about the companies, we can say that doesn't look right. And what we do is focus particularly on global employment and do turnover. In terms of the data I'm going to talk about growth, it's really about employment. Employment is the most reliable of these because turnover and profit will change around. But we look at the growth of employment as a proxy for saying this is what economic growth is happening. We may have a bias in productivity and so forth, but by and large that's the method. We started doing this, as I said, right in 1979. We've had the original number of companies there. We were 19 and identified there were 36 in the rest of the totality was 36 in Cambridge. We now have 5,500 knowledge-intensive businesses in Cambridge, which we measure every quarter. The important point here is that we basically realized that top-down data was actually unsatisfactory. All the share data, shift share stuff, so we were looking from consultants and so forth, just wasn't giving us the accuracy. There was no confidentiality, there was no transparency, it was all unclear what the data was. It was backward looking and it was averaging, so we didn't pick up the particular companies, a big contract they got, for example, how that affected the numbers. And it particularly spatially averaged businesses, which is important, because in fact one of the things you'll see is that clustering is a particularly important feature. We have a very high rate of births, and of course that top data wouldn't pick that out. We realized just how much the knowledge-intensive side of the sector is in the economy. It's about 35% of all employment now in Cambridge is knowledge-intensive businesses. So having this kind of capacity to look at it was important, and hence we went with this bottom-up approach. It is very important because people feel ownership of what the data is and they understand what they're doing. We were able to bring this back to the planners because we found that when they were trying to do their forecasting, and this is still the case with most utilities, they were using the national data and then trying to transpose it downwards. And we were basically saying this data is just ending up with flawed. And the one on the left-hand side is actually a graph showing the data that we come out is this one, that there. That's actually our growth in employment. And all the other ones down below here were all East of England forecasting model came out from consultants, initially Oxford Economics and then by Cambridge Econometrics. And every single one of these was underplaying the rate of growth. So all the planning was driven at a lower level than actually what was happening in reality. And the same is also true, and Richard known, I've talked about this discussion, that actually even at the BRES level versus our data, we've always shown ours as being somewhat higher than the national statistics. So that's kind of the piece about why this corporate database is important. Let me move on now to the second phase. I'm going to give you just a little eight slides quickly, and I'm going to do it twice because actually what I'm going to show you is what economic growth actually looks like. All right? So what I'm doing, I'm going to move it 8 times and watch the dots. The dots I'm going to show you is the size of the dots of the employment of each dot. And the pink ones are research institutes and the blue ones are companies. So here we are. This is Cambridge Life Sciences starting in 2011. Okay, do it again. Starts like that, and just so this kind of data enables us to see how growth is happening spatially in the area around Cambridge. And if I were to look at it more broadly, Cambridge has now got a sort of polycentric structure which has 5 different centres which have different sectoral exposures. And further out, we can see emerging, they're going out in this kind of arc there and up towards Waterbeach. So this is a kind of an issue of spatial growth is important in understanding the way the area has grown. Now, our company corporate database gives us the ability to do this spatial analysis. And again, this other group, the architecture, they've been modelling the Cambridge economy as a system for about 35 years. They have detail about how people have moved and lived and where they want to transport themselves. What we realized is that the key agent in the development of the spatial development of the area is driven by companies. And that companies make their location decisions which are based on labour and land availability, on ease of connections, suppliers, customers and markets. And particularly we notice that the technology companies tend to want to work together, be in the same sort of area, and that the kind of the relationship of how the agglomeration is managed and grown is particularly important, particularly to do with transport. What then happens is the employees usually come in, and Cambridge has gained from a great deal of inward immigration within the UK. People come in, they want to work in a company, they get their job, and then they say, well, where will I go and live? And then they look around for where they want to be, and they do a trade-off between the cost of the houses, the distance that they're going to travel, and what their job is going to be. So that we can then map the relationship between employment growth and then housing, other services, and so forth. So that's the idea. And our evidence is clearly that the spatial change in Cambridge is driven by employment. That's a very important point, policy, because most policy on planning is about housing. And so you think about housing, and then you say, well, where's the employment? And one of the cases I thought about is Cambourne, which is the west of Cambridge, was set up by the planners on the west of Cambridge. Everybody thought it was fantastic, but in fact all the growth in life sciences is on the east. So all the traffic was going from the west that way, or else it was going in to be people who wanted to get onto the railway to go down to London for dormitory purposes. So actually understanding where your location is, of your employment is growing versus your housing is absolutely critical. And what we find, obviously, is clearly these clusters are very important in creating changes in the spatial distribution of the economy. What's also come out in Cambridge is, because Cambridge has grown really, very fast, is that you've got to then manage the clusters. And the clusters are quite complicated because clearly everybody piles in and wants to be there. But what that does over time, it pushes up costs, and over time, if you're not careful, then you'll burn it out. So you have to actually manage a bonfire, is what I describe. You've got to make sure there's enough growing at the centre, which keeps it still powerful, but you've got to let it grow out. But you mustn't go so far out that actually it loses the centre. So that kind of way of managing the clusters is really absolutely critical. And we can see many sectors in other experience in history of sectors which basically have burned out. I did a lot of work on wool textiles in Yorkshire, and that exactly, it burnt itself out at the centre. So planning is then thinking about this thing as a system, and we can then say, okay, well, how do we then reflect what we think is going with growth versus these parameters that affect the costs and so forth? And can we create infrastructure which will enable the expansion of the clusters in a more balanced way? So clearly there are a number of options you can make in terms of spatially planning, where you want to have them with a densification, whether you want to disperse it all. A lot of discussions in Cambridge about sort of when they're doing planning, they're sending companies off into small villages outside Cambridge, where you can allow it to drift at the edge, or could you use transport to actually make contacts? And transport is a particularly important impact on trying to change the geometry of these clusters. And what we basically want to do is end up with good growth, where we're having sort of good growth happening and putting in the infrastructure in time ahead of it so that the thing continues to grow out in an effective way. If you don't do that, if you don't put the infrastructure in to manage these clusters, then what you end up is with strains. You end up with costs rising, you rise up with occupancy in housing rising, which we certainly see in Cambridge. We see escalating rents and property rises, worsening congestion, and eventually companies get fed up with this and basically will think of going elsewhere. So the issue about managing these clusters is really critical part of your planning. And I would say, and to any of the consultants, I am not a fan of trunk transport and corridors. I believe in transport is much more palmate, that you go outwards from the centre. You have centres rather than corridors. and then you have the transport going out, extending the scale of the centres, rather than thinking that somehow you can get 1 for 2 or 2 for 1 by building a big trunk. So that's our experience. And in Cambridge, we're using this Cambridge Futures analysis. We basically are able to show the input on the employment and the forecasts of those, and then we can forecast what will happen in terms of costs, in terms of congestion, and in terms of house requirements. And in the SPEAR report, we said the requirements of houses were going to be silly, larger than being identified. What we know is that if you don't get this sorted out, as we know has happened in Silicon Valley, over 50% of employees in Silicon Valley do not now want to be living in Cambridge, in Silicon Valley. And Cambridge Ahead has noticed that is also a pressure. So this whole question of running the system is important. My last tool, and how am I doing? Am I going too long? Okay. Right, this is basically, we don't do forecasts. We do projections. Important point. We don't try to look at sort of national forecasts and try and put that into the system. What we do is we look basically at the most recent past, and we then say, well, let's use that as a view, and then where we think that's going to go forward. We produce projections, and the key point here is that we accept at the end of the day that the economy will move back to the national average. That's going to happen. But the question is how it moves from where it is now to there. And this is a kind of a finance idea. That basically, if your velocity of your growth is very high, then the rate at which it degrades back down to the national average determines the rate of the regression. So if you have rather weak growth, then you'll regress quickly, whereas if you've got strong growth, then your regression will actually be slower. And then what we do is try and do this forecasting with the planners on an annual basis so that their plans are basically agile and looking forward, rather than trying to say, well, we know what will be in 2041 or 2050 or whatever. So that tool of projections rather than forecasts is something which we've tried to develop and has been so far worked quite well. So, 3 tools: bottom-up corporate employment data set, understanding about agglomeration and spatial systems, and projections, not forecasts. And I would just say this is quite low cost. If you're a local authority, we're spending £55,000 a year maintaining this data entirely, right? It isn't very costly. You've got to start off, it's about £120,000 to start with in an area, but then we think other regions should be thinking of this thing too. Thank you.
Matthew, thank you very much. That is a very strong case being made for a bottom-up approach. So that's very good. We'll now pass over to Anna Valero, talking about, in a sense, the industrial strategy perspective. So Anna, over to you.
Thank you. And do please let me know if I'm running out of time, because I can't see a clock anywhere. So it's great to be here. As Ed said, I'm going to be talking a bit about informing national and local industrial strategies. So I'm going to be drawing on a body of work we've been doing at the LSE for some time, using different data sets, trying to grapple with, what are the UK's strengths, what are the trends in British industry. So my first slide is basically like the case for granular data. I think probably everyone here kind of agrees we need granular data. It's really important for informing the IS designs and the industrial strategy. I was in government for 14 months, kind of working on the industrial strategy, and obviously there was a lot of analysis going on, a lot of consultation, evidence gathering, etc. But to actually kind of get to those 8 sectors and then subsectors within them, you need granular data, but also like on an ongoing basis, programs within the industrial strategy, whether it's going to be UKRI grants, etc., there'll be an ongoing need for that kind of granular data. And then for monitoring delivery and evaluating progress as well. And I think, we all know that traditional data sets vary in their granularity, and you'll have lots of really nice granular data, perhaps for some more established sectors, but also they don't map perfectly to each other, plus they don't fully capture emerging sectors and technologies. So this chart is just to illustrate that. So This is one of my favorite charts from the Economy 2030 inquiry, which was a collaboration we did between the CP and Resolution Foundation. And it's simply, if you just look at the top right quadrant there, these are sectors that have been growing over the past decade from when that data was, that have a revealed comparative advantage based on data on trade. And then the size of the bubble is how big that is as an area. So you'll see there some industrial strategy sectors like finance, insurance, professional services. You'll see things like aircraft, pharmaceuticals, and also creative industries. And I suppose that's my link with this building. So in that paper, those who have worked with trade data and SIC data will know that the classifications aren't completely the same between what you can see in trade data on services, which is quite aggregated. It's not going to cover everything that's considered the creative industries. I grew up coming to this building a lot because my mum worked at the BBC World Service. And so in this report, we had a whole section kind of on more depth and detail, looking at broader data sets on some of these sectors to understand the kind of source of their strengths. Okay, so there are a number of measurement challenges. Ideally, we'd have a picture like that with perfect data, really understand internationally comparable granular data, trends over time. But we don't, and particularly there are gaps for emerging sectors and technologies. So I think what we've been doing in our analysis, and I think I'll have a couple of slides on kind of the way the analysis was done for the industrial strategy and paper as well, the policy, is to complement traditional data and classifications with novel approaches. But just to be really clear about the pros and cons in each. So as an academic, I like caveats, but I think it's really good to caveat and just be really honest. Like, what can you say with a particular data set and what can you not say? And ideally have a range of approaches which can build quite a full picture on whatever your question is. So some key data considerations, obviously how easy it is to access the data, how you can link data with other data sets that are important, or how accessible aggregations or disaggregations are. And this is where I kind of just wanted to draw your attention to something we did around a decade ago with Richard Davies, my colleague at the LSE, an atlas of British industry. And there's really been so much progress over the last decade, and I think we'll hear about that from the ONS in a minute. But at that point, we had applied for the microdata. It was taking a long time, but we just wanted to kind of get a report out following the LSE Growth Commission on a more granular spatial analysis. So we kind of worked with what was available in the aggregations and the data, had a number of maps, location quotients, et cetera, for different sectors. But since then, there's just been so much progress. So then, of course, the extent to which sectors are represented, SIC codes are being updated, lots of things will now be represented, but still some disruptive areas won't be, or areas overlap. Geographic information, so with Orbis, for example, you'll have registered office, HQ. With the ABS or the BSD, you'll have local units, you'll have reporting units, there's apportionment issues. If you want to know where R&D activity is going on, you know there's a number of plants, how do you know that for sure? Even with some of the granular administrative data on firms, you're not going to have all of that information. International comparability, really important. What's the time series? What's the timeliness? So with what lag will you get the data? What are the assumptions that you might have to make when you're cleaning the data, of course? Different researchers will do different things. And then, of course, what variables are available. So past performance versus future opportunity. And I think this is quite core in thinking about innovative sectors. So a couple of slides just basically taken from the industrial strategy. This is on the IS8 and the frontier industries, and this is from the paper itself. A little bit here from the technical annex. Basically, these sectors were selected based on assessment of growth potential and policy opportunity. This was a mixed approach. It combined official data and non-official sector classifications too. And in emerging sectors, of course, where SIC-based data sources are not necessarily going to tell us what we need to know, this was supplemented by non-SIC-based sources. So as it was listed, qualitative research, talking with industry associations, and kind of big data techniques. And we'll be hearing more about that from the DataCity, and I'm also going to touch on some DataCity data in my presentation. But what it emphasizes is that continued review and improvement on data and definitions of the IS8, supply chains, beyond the publication. So the words that were used were, it's not a one and done. So very much a continued role for all of our work and research. On place, there was this identification of clusters, which places in the country have strengths in these sectors, how places connect to each other. Again, this combined different data and methods. and quantitative as well as qualitative evidence drawn from the government sector and area teams, external experts, MSAs, DGs, and the DSIT Innovation Clusters Map, which was something I was on the advisory group of at the time. And that's a really nice piece of work, and I think it was using DataCity data as well to actually understand different definitions of what a cluster is and where the activity is. So what I'm going to do in a couple of minutes is do a spotlight on clean technologies. This is an area we've worked on a lot. They matter if you care about net zero, but I think they're a very good illustration because they are emerging sectors, which we know that SIT codes don't represent so well, although, of course, the latest updates are an improvement. So they've also increasingly been a focus of industrial strategies, not just in the UK, but overseas, so a lot of kind of academic interest in this as well. What we've done in a program of quite a few reports, some quite cross-cutting, some quite what we call deep dives, where we go in depth in a particular technology area, is look at a range of data sets and try and understand where does the UK have comparative strengths, where are the jobs, where's all this located in the UK, and what's the role for policy. And so we've done a lot of work with patents, which is quite nice because you've got really granular classifications, available over time, available internationally, trade with goods. But again, that's tricky because you've got historical data on traded goods. They're not necessarily all actual clean technologies, but then you rely on mappings to say, well, this is relevant for certain clean technologies. Firm-level data with classifiers, such as the DataCity in Beauhurst, and jobs. Many of you will know there are many different ways of measuring and understanding green jobs, and we've been doing quite a lot on that as well. And then not just kind of using the data, but generating new measures to inform policy, such as spillovers. So looking at patenting, this is nice because you can be a bit more forward-looking. A patent today could be a growth sector of the future. I mentioned a bit some of the pros and cons. Well, I mentioned the pros, but there are also some cons, of course, because when you get the patents data, there's some lag because it takes a while for it all to be fully up to date on a consistent basis. And of course, not all innovation is patented. So again, we're always very clear about that caveat. But revealed technological advantage is like revealed comparative advantage. And we've done similar charts to that bubble one, but this is just a bar chart saying, well, here are some clean technology categories. The UK has a comparative advantage in the patenting of some of these. And the width of the bar is like how big this is on a global scale as an area of patenting. But what I would say is aggregation really matters. This is a measurement lesson. So you look at grid flexibility and you go, oh no, well, the UK doesn't really have many strengths there. But of course, how you aggregate things really matters in terms of what you get out of the data. So what we did here was much more deep dive. This is that same format as that scatter plot. But here we're saying, well, within decarbonising buildings, let's look at sub-technologies. And again, so there are a number of areas where you can find evidence of comparative advantage, growth, etc. But we complement this. This isn't kind of enough. So we complement this kind of analysis of patents with sector discussion, other data, case studies. And that's what we call these deep dives. This is a timely example of one of our deep dives because we just published one last week. This is one on adaptation technologies and services. Actually, the CCC has released a paper today, you might have seen it in the news, about the case for investing in adaptation. But this is a new lens. This is saying if adaptation is more and more of an imperative for countries like the UK and internationally, what are the products and services that are needed and how can the UK serve those markets? So it's the same kind of formula. There you'll see we're actually very specialized in these technologies. That's the patents. But of course, the patents aren't going to cover services. So we take a case study approach for financial services, professional services. And then we actually use the DataCity data because SIC codes don't have a nice kind of adaptation category. But then even with the DataCity data, we have to take 3 different approaches. And for them, again, we're setting out the pros and cons. So one is you can look at the relevant classifications that the DataCity have done. And you can say, okay, within net zero, within ESG, how many firms are referencing adaptation? That gives quite a small number of firms. Then we also did a bespoke classification where we said, okay, regardless, like across the economy, which firms are directly working on adaptation, and we take that as like they're mentioning adaptation. With this one, you're going to get a really broad classification because you'll get big consultancies that do loads of stuff, but also talk about adaptation. And then a wider classification is just your own judgment of, okay, which types of firms are going to see increased demand because of adaptation, so air conditioning and other things. So the paper has more detail, but it's just to say you've got to be really clear what your assumptions are and then kind of bound what your estimate is. Just to illustrate some of the spatial stuff, because I think that's the focus of today. So where geographic information is available, you can identify places with specialization. And this is taking patenting. And while we know that the Golden Triangle patents more overall, when you take clean patents as a proportion of total patents in a place, you'll see that less productive places tend to have more of an intensity in clean patents. So just to kind of draw your attention to Cornwall and the Isles of Scilly, kind of up there in the top left, seems like maybe they don't do so much painting compared to London, of course, but quite a high intensity of those are clean. And then taking other data sets, we see this similar pattern. So with the DataCity, here we use business site, and whether or not it was kind of classified in the net zero economy at the time. And again, you'll see Cornwall and the Isles of Scilly in that similar position on this kind of number of businesses and the share of those being clean. Again, you've got the same pattern. And then using Bowhurst data, which is very much looking at the high growth firms, much smaller set of firms. Again, similar pattern. So different data, different assumptions, pros and cons, but you in the end get kind of a clear picture. And I think if you look at the industrial strategy and the clean energy sector plan, it does emphasize that there's opportunities for growth around the country because of where these activities tend to be located. Final slide, which is a bit cheeky because it's a slightly different question. We've been talking about classifications, but this is more about kind of novel data on variables themselves. So part of the industrial strategy was a technology adoption review, where this was considering evidence on, across the IS8, what's technology adoption looking like, what are the barriers, what does this mean for policy? Of course, technology adoption in and of itself is something that many people are now measuring, and indeed the ONS now has some measures in some of its standard surveys, but at the time of the review, I mean, they kindly referenced some of the survey work we'd done. Some of those more standard data sets weren't available, so there really is this need of granular data with enough observations within sectors to say something. And so what we've been doing over some time, and we've got kind of more work planned on this, but timely surveys on both the extensive and intensive margin of adoption, so relatively small sample sizes, but some of the first evidence on why businesses were adopting AI, what they expect impacts to be, which business functions they're adopting AI for. So that was our survey with the CBI. And then also kind of more novel web-based measures of adoption. So using Lightcast data, we have a paper which is now revised and resubmit in a journal, but it's looking at job ads as a proxy of technology adoption, something that others in the literature have done as well, and relating that to skills. And finally, the value of experimentation and evaluation, this kind of ties to places. So the Business Basics program was something under the previous industrial strategy during the Greg Clark era. And this really encouraged academics, private sector, and local leaders to work together, experimenting and also building kind of local specific data. So we worked on with the GLA on an AI adoption project there and kind of gathered that survey bespoke data for the place. So to conclude, I think different data and approaches are complements. I think you should always be clear about the pros and cons, and it really depends on the question you're asking. For sectors, even with the updates, there's still going to be a role for all these other approaches, particularly in emerging sectors, understanding firms that sit across sectors, and considering more forward-looking measures. With places, I think while national data on regional economic activity have improved in recent years, there are still gaps, so we do need to complement the really nice macro-level but disaggregated stuff that's consistent with local data and insights like we've seen. And on variables, things like AI adoption, green jobs, there's a lot of value in timely measures from a range of sources while official sources are updated. And then the final point is really important to build data needs, generation and linkage and evaluation into program design. Thank you.
Thank you very much, Anna, and that was a great advert, I think, for the benefits and the merits of really drilling down and getting this taking the concept of clean tech and not taking it as just an adjective and a noun, but drilling down into what it actually is composed of. So really, really good. You mentioned this work being a complement to national data sets. So let's now hear about the national data sets from Richard. So over to you, Richard.
I might do it from sitting here,
fine.
I think. Yes, please. I'll just introduce myself briefly. So I've been at ONS for over a decade now, working on regional and local data throughout that time, mostly on kind of analytical work, also chair the kind of government's regional geography committee. And before I joined ONS, I was also engaged in economic analysis of regional local data, this time as a customer of ONS. I used to work at the Greater London Authority as an economist and in the private sector before that. So being part of ONS, I am, of course, involved in the production of ONS statistics, but a lot of my career has actually been about the analysis of the data and development of the data. And in that context, I very much share the kind of interest of everyone else on the panel in wanting to use this data for kind of policy reasons and understand, real-world context. Now, the reality, of course, is that not every statistical hypothesis or policy question has a perfect data set or classification just sitting there waiting to be used. Things are often a little bit more complicated than that. So all data sets, whether from ONS or elsewhere, they have their strengths and they have some limitations. Likewise, all analytical approaches to data have plus points and weaknesses. And even classifications of statistical geographies can be great for one question and then completely inappropriate for a different question. So from the ONS perspective, those of us working on regional local data, we're kind of always aiming to provide data, classifications, geographies that really play their part in allowing people to answer these questions alongside other approaches from other sources. I'm going to briefly talk about 2 or 3 things. I'm going to briefly discuss the evolution of the data that ONS have provided and regional and local. I'll then move on to discuss our geographies and classifications. And then finally, I'll discuss some of the challenges and issues that we face producing regional and local statistics. Unfortunately, there's no interesting charts and graphs for myself. We do have them, and I'd love to talk to you about them outside of this meeting. But for this particular presentation, my ask is really to give this more generic discussion rather than show off our own work. So, yes, please, thank you. So every so often, we get official reports into UK statistics. So examples would be the Bean Review in 2016 and Allsop in 2004. And one of the things those reports had in common was a recommendation that ONS did more subnational data and statistics. So in that context, the past decade has been a very positive one. As it's already been noted by the other panellists, there's been a lot more data produced in the past decade from ONS. And this slide gives some examples. So a decade ago, regional GVA wasn't available for local authority. It was only available for 30 industries. It was only available via the GVA income method. Now it's available for 80 industries. It's available for local authorities. It's available for combined authorities. There's even experimental data at neighbourhood LSOA level. It's been a similar story for productivity. It's been a similar story for gross disposable household income statistics, and for a range of other outputs that have seen more detailed geographic and sectoral data made available. At the same time, new outputs have been developed. These have covered topics such as trade and services, public sector finances, household financial consumption expenditure. All these are now available on kind of regional or sub-regional bases, whereas a decade ago they did not exist. We've also been using new data sets. We've been utilizing data such as consumer card data, other admin data. There's a couple of presentations in this conference around those topics. And we produced new geographically related topics, data on towns, high streets. We've also increased our local engagement with creation of ONS Local. We work very closely with consumers such as the mayoral combined authorities, helping to try and facilitate that link between ONS data and kind of policy relevance. Next slide, please. Thank you. As well as expanding the amount of data available. I'll be very quick on this one, but we do disseminate it as well. There's various, for users wanting a quick visual guide to regional or local data, we have developed the Explore Subnational Statistics web portal. ONS Geography portal, meanwhile, provides open access to all the geographies and lookups used across government. And Secure Research Service exists for approved researchers to work with the microdata. So the data is kind of available, in lots of different ways for different audiences to use. Okay, so that was my little advert for ONS's work as part of this discussion. And I'll now move on to talk about a few of the issues. So let's start with the industrial classification. So next chart, please. So I think the challenge for ONS on industrial classifications is that there's some very opposing demands for them. On the one hand, we need a classification that is stable, that can be used over a long period, that provides time series data, that can kind of be internationally comparable with the kind of international standards, which also move, only get updated occasionally. On the other hand, the economy changes quickly, and there needs to be an availability of, some way of kind of noting that and people being able to work with more up-to-date industries, etc. Is it even possible to achieve both in the same classification? It's certainly, a difficult issue, difficult problem. What are ONS doing on the topic? Well, ONS have last month we updated the SIC classification, so the Standard Industrial Classification for 2026 was published. It should now better reflect the UK economy. Updates have included new detail level breakdowns of software activities. There's space within it for the artificial intelligence to be kind of captured. It splits for a variety of energy capture, supply, storage, recovery activities. There have been some large-scale changes in financial services to help us align with the System of National Accounts 2025. And all these changes will start to feed into our surveys and then over time into our kind of high-level outputs. I think as our teams have put that together, and they did it with consultation, spoke to a lot of people, there's also a recognition that a single classification won't satisfy every use case all the time. And the teams who work on the classification teams are kind of aware of this. They're moving on to investigating now whether it's possible for them to additionally collaborate with academia, with the private sector, with the other parts of government to kind of help identify whether there's complementary ways to kind of handle that wider issue alongside having the standard SIC classification that's there for the kind of national accounts and the international standards. So that work will be ongoing, and it's very much hopefully already started, but if not, we'll be starting very soon to kind of try and bring together some of the ideas there so that we kind of stop struggling with that kind of issue that has existed. A brief mention of geographies, because something I kind of work on quite a bit. Trying to ensure there's a useful range of geographies for use in and out of government is something we look to do. We produce the lookups, etc., and data for administrative geographies, and we also produce a range of statistical geographies. And between them, they allow for quite a wide range of applications. And more recently, with tools such as Explore Local Statistics, that kind of provides the option for user-defined geographies. You can kind of draw it on a map and get your own kind of data. So again, we made a lot of effort over time to try and have, aware that there's a lot of different customers needing very different things in the regional local space and trying our best to meet as many as we can. A quick mention that there's quite a big challenge on the way in terms of the geography. Local government reorganisation in England is due in April 2028, which will lead to the abolition of the two-tier local authority structure, replacement with unitaries. So this is the kind of largest change since the 1970s to the English local government, and will mean quite a lot of work for ONS, government, local authorities, private sector suppliers, everyone who works with the kind of regional local data. So one of the things we'll be doing is trying to kind of help everyone on that journey. Next slide, please. So aside from geographies and classifications, what other challenges and issues are faced by ONS or anyone else who are putting together regional local statistics? So there's sometimes talk about top-down or bottom-up approaches to producing statistics. In effect, ONS kind of does both. So we conduct a range of business surveys, some of which are very large. These typically have their own ONS output associated with them, and the microdata from them goes onto the SRS for researchers. So the BRES survey provides data on employment, ASH on hours and earnings, ABS on data and turnover. So this data can kind of be considered bottom-up. Data is being collected, aggregated, adjusted for statistical bias and things such as that, and then published. The reason for additionally having top-down approaches is that in most cases, those single surveys don't cover the entirety of a topic. Putting together a full set of economic accounts requires data on multiple topics, and that requires multiple sources. So even if you try to do productivity work just with the microdata, the annual business survey doesn't include agriculture, doesn't include finance, doesn't include the public sector. So you have to kind of go to other approaches or bring together multiple data sets to kind of look at a more whole economy measure. So therefore, we have a lot of kind of sets of economic accounts with approaches guided by frameworks, by academic advice, international experts, and such like. So in terms of regional data, this kind of whole economy top-down method is the one used, one kind of used in the regional accounts, the regional GDP, etc., where we use a lot of the ONS data sets to disaggregate the data down to local areas. Whether we do top-down or bottom-up, the aim when producing regional statistics is usually to try to allocate economic activity to the location it takes place. And this is not always a straightforward process. Businesses typically report activity such as turnover at their enterprise level, but you don't want as users us to allocate all of Tesco's output to a single point in the country. So we have approaches to allocate this output around, to try to match it to local areas, to local plants, and more accurately match the actual location of activity. Overall, the quality of regional local statistics can obviously be influenced by a number of things. Sample sizes are clearly important. The smaller the geographical area considered, the more variability there is likely to be in the data. So that's why our neighborhood data, the kind of LSOA type data, is published with kind of cautions and caveats, and why it's going to be too much influence on a single LSOA point. This data exists to allow users to build the data back up, to build them back up into kind of areas that they're interested in. And because that's something that's often been asked of us, to allow people to have that flexibility to design their more flexible geographies, etc. So we supply the smaller area data, but it is better once it's aggregated up to larger areas where you've got larger samples, and then the data will be a more reliable estimate. So the final point I'll make on this is that changing approaches to work by both individuals and businesses can and will continue to create challenges for producers of regional local economic data. This is particularly the case if they make it difficult to isolate and identify location. So if an individual is on the payroll of a company but never goes into the office, is it correct to allocate their contribution to the office location? What about if someone works in a hybrid manner and they're partly at home, partly at the office? And if we wanted to try and distinguish this very carefully, where would we get that kind of detail of data from? So there's always these kind of challenges being faced. Similarly with businesses, as I have mentioned, the overarching aim for us is to allocate activity based on location. We make adjustments already to ensure that we're not allocating activity just to head offices and that it goes around the country to local branches and other places. But what about firms that don't have sites, or firms that, maybe construction, or firms that run payroll for multiple firms, etc.? There's challenges out there sometimes, And sometimes where it can be very difficult to tease out a single location or different locations, sometimes activity has to be allocated to the registered site of the business, as that's the only realistic possibility. A few very final thoughts myself. I think agreeing with other panelists, when we consider ONS data, it's not when we consider answering analytical questions, it's not kind of either or, either ONS or other people. Ultimately, an analyst, will be asking, is this data set suitable for the thing I want to do with it, whomever it's from, and they will find pros, they will find cons in each case. Ultimately, some of the issues I've mentioned in putting together local and regional data do not only uniquely apply to ONS. The same issues apply to everyone else who has a go at putting together regional and local data. Whether new data, traditional data, etc. I liked Anna's slide earlier on, which listed a number of the reasons why you have to look very carefully at every data set and look at the pros and cons. I think I've said a final point about 3 times. This is the final point. Well, it's great to have multiple data sources and approaches, but it's also kind of interesting question about what is the correct number. So I've tended to find that, in my experience, everyone is super happy every time new data sources and approaches give us the possibility of answering new and different questions. And often they do. Some of the data we do can allow us to look at the data more seasonally or something, and look at a coastal area and understand, its seasonality, which might have been difficult before. Users are often less happy if we or collective, set of people end up with multiple different results for the same question. And I think that's it's around this point that I think, the ongoing collaboration between ONS and other users, such as the co-panelists here, becomes very important. Trying to kind of build a shared understanding of the different data and approaches, their relative strengths and weaknesses, is kind of key. We've already heard from ONS how we're blending together lots of different data and approaches ourselves now, and I think, getting that wider understanding is very important so that, we can collectively help people understand the correct data as well. So thank you. That's
Thank you very much, Richard, for that very honest assessment of the challenges and the issues, and I think also the point about it's not as simple as top down and bottom up. And thank you also for leaving the audience wanting more. That's a maxim, isn't it? Saying you've got these great charts and graphics and so on. So come to Richard if you want to see those. And thank you, Sarah, for advancing the slides. Paul, over to you.
Lovely, thank you. Hello everybody, I'm Paul Swinney. I work for the DataCity, which is a tech company based in Leeds, so a northern tech startup that now has offices in London and New York as well, so we are rapidly expanding too. What we do is we try and measure the cutting edge of the economy, and I want to talk to you today about how we go about doing that and what the challenges are with doing so. The first thing to say before anything else is that the purpose of what we do is to complement and augment what the ONS does, or as we move into international territories, what other national statistics authorities do, rather than replace them. Sometimes, I think Richard was alluding to this, you get into a bit of an argument about whose data is better and this one's going to supplant that one. Actually, I think there's an important role for all these different data sets, and it is about how do they complement and how do we fill in gaps in national statistics where they might well exist. And one of those gaps is in the very cutting edge of the economy. Now, you can see it everywhere. Pick up a newspaper and have a flick through, particularly the business section. There'll be all sorts of headlines like this about major AI breakthrough to make chatbots more like humans. Matthew's talk earlier was touched a little bit on that. Cancer breakthroughs and DNA. Create tech was a sector that was pulled up in the industrial strategy. Hadn't heard of it until it was put in the creative industries sector plan. It's that cutting edge. And now story there about AI's curing incurable diseases or previously incurable diseases too. These are all fantastic things. These are the things that policymakers then want to be able to measure. Which companies are doing these types of things, where they're doing them, how many people they employ, what amount of investment are they getting into them. And yet, When you then go into the official statistics, actually it's really hard to find them. Why is that? We've alluded to this already. It's because of standard industrial classifications, which do act very much like a straitjacket on national statistics authorities, and there's two big challenges with them. The first one is that they have quite the large vague buckets in there, like activities of business services not elsewhere classified. Not wrong, doesn't really tell you anything though, does it? And about 10% of businesses sit in the not elsewhere classified SIC code, even more for employment, where that's the case. That's a big challenge for trying to measure the economy. And then two, the second one is that frontier industries are just not captured by them. You know, the economy is constantly evolving. So having a set SIC code system or set sector system, which is very understandable, and a lot of economists like it because they do like stability, actually doesn't move with the economy, which invariably should be changing all of the time if we are progressing. We should be seeing these new sectors emerge all of the time, like career tech, software as a service, med tech, wearables, etc., 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 etc. And we very much focus on this second part about trying to move companies, particularly from the not elsewhere classified SIC code, into some of these frontier sectors, because that's where a lot of these frontier sectors actually sit. Now, that's really important from a policy perspective, particularly from a productivity perspective, as Anna was alluding to, because the industrial strategy should very much care about the very cutting edge of the economy. You know, this is the place where innovation happens. This is the place where productivity increases are going to occur, if they're going to occur anywhere in the economy, and yet we just never measure them with the standard sector definitions that we have, and that's therefore a massive, massive challenge. So we try and fix that. Let me tell you how, if it will change. There it goes. Right, how do you do it? The very, very simple version, so as not to bore you, is on this slide. We take company's house data. That's where companies legally have to register if they want to incorporate themselves. Fantastic administrative list there for us to start with, to be the skeleton of our data. We then go and hunt the internet, you might have heard of it, to go and search for the websites of different companies. We find that website, we attach that to the company. That sounds really simple, I assure you it is not. It's really, really hard. And then we use machine learning to look at the patterns of words on those websites to say, right, well, how do companies describe themselves? Never mind the SIC code that they've picked out for a company's house. How do they actually describe themselves? And then from doing that, we use the machine learning then to define a number of cutting-edge sectors like wearables, medtech, etc., etc. Then find out how many life sciences companies there are in Cambridge, which Matthew obviously already knows because of the great work that he does. But then we can say, but this is how it compares to Edinburgh or Aberdeen or wherever it is that you might want to have a look at. Shouldn't have said life science, I should have said AI, because that's what this map shows. So what's the output of what we do? That is the map of all of the companies that we've defined operating in artificial intelligence in the UK, down to the individual company level. So each little dot on there is an individual company. You can see where it locates, where it doesn't, and there's certainly quite a lot of clustering that goes on. Now, that is down to company level, echoing what Matthew was saying, is really important because all of a sudden you start to get a whole lot of flexibility around what it is that you want to look at. So if you want to then understand, right, well, I'm looking at companies of this type of nature, right, let's pick out those individual companies to create my own sector, then you can do that. Or if you, for example, want to look at geographies, then you can start to define your own geographies as well, because this is down to postcode level, it's down to address level. So all of a sudden, administrative boundaries go out of the window, and you can define whatever geography that you like. And let me give you a bit of an example of that. So this is the same map, AI companies, and then we start to look at clustering of different companies. Now, there's no definition for clustering. Everybody talks about clusters and how amazing they are, but nobody can agree actually on what a cluster is. But what we've got on our tool is some parameters that you can slide around, and you can come up with your own definition of a cluster. But the important thing is whatever your definition is, you then apply it across the country. That's the really important bit, that it is comparable across the country. On the left-hand side there, on however I'd set the slide is, it starts to identify, group all those companies into individual sectors, into individual clusters, which is what the colours do. And on the right-hand side, we then say, right, okay, well, let's then start to get some statistics around those clusters. So that pop-out bar there is for the Belfast cluster in AI, which actually is quite large, but does centre in on Belfast. You can see that we can then start to come up with how many companies are in there, what's the location quotient, how many employees are there, what's the turnover, etc., etc. It'll be able to give these very granular statistics on bespoke geographies in a way that has been quite difficult to do in the past in the world before big data. And then you can go down a very particular geography. So to take my particular area of interest, city centres, you then go in and you can look and define city centres and say, right, well, how many of these companies are based in Manchester city centre, which is what this chart shows compared to the centre of Cambridge, the centre of Edinburgh, whatever geography that you want to compare across. And I think city centres are really important because they play a disproportionately large role in the national economy, and yet we haven't really got any definition for them from a geography perspective because of the way that administrative boundaries tend to be created. But so using this type of approach then means you get around that to actually look at this really, really important part of the UK economy. But very finally, word of caution, because obviously I've hopefully presented a sunny uplands picture where this is all fantastic, isn't it? Amazing. Just give me the data now and we'll be able to get all of these insights. Well, of course, there are going to be trade-offs with any sort of data set. And the analogy that I like to use is one of going to the supermarket. If you walk in the supermarket and turn towards the ready meal aisle, that's about like going to National Statistics website or a government data website. You're going in, you're going to the shelf, you're selecting your ready meal off the shelf and you're putting it in the oven. And you get it out and there you are, and you've got the stats that you're interested in. But working with big data is like going to the supermarket and instead of turning right to the ready meal aisle, it's turning left to the fresh fruit and veg aisle. You've got all the individual components there. We've got millions of companies in our data set. Then you're the chef, and you've got to do the cooking to put that together. Now, some people are very good at that. For some other people, that can be a little bit overwhelming, but that's the big challenge about, right, well, how do I then try and wrestle this data to get the outcomes that I want? Now, a little bit like cooking your own meal over a ready meal, I guarantee you that it is much more satisfying in terms of the results that you get if you do cook your own meal, but it does then require a lot of time to actually put that together in the first place. So it's this element of understanding that, yes, you've got to go in, you've got to pick out the carrots that haven't got the mould on them. If they have got the mould on them, you've got to go and scrape it off, and you've got to clean all that up before you put it in the pan. Then you've got to sort of think about it, put it in the pan, cook it, test it. Does it look right? Look in, as Matthew was saying, you have colleagues to look and say, does all this seem right when you look at it on a map? Do that testing before you be then willing to serve it up. And it's not just a case of, here's the data, here's some aggregate stats on it, therefore it must be right. You have got to do that level of checking, which indeed, that's exactly the process that happens within ONS when they're taking their big data, doing a lot of work internally before it then is put up on the Economist website or the ONS website. So that's all I had to say on the DataCity. Thank you very much for listening.
Thank you very much. Thank you very much, Paul. Colleagues who work with me will know I like a good analogy, and the mouldy carrots will definitely stick with me. Right, normally in these things, the chair gets to ask an opening question, but I'm pretty confident that these 4 great presentations will have stimulated lots of questions from you in the audience. So I'm just going to open it up, have a show of hands, and we'll maybe take a couple of questions and then come to our panel. So I've got 2 here, a lady at the front here and then a gentleman at the back.
Hi, I'm Gemma from Department of Business and Trade. I'm an analyst of trade data and business characteristics. So I'm exactly who you were mentioning. Policymakers want to understand the value of different sectors and the industrial strategy sectors, but they're not reflected in the current classifications. So my question was going to be around this whole mapping challenge, and I suppose DataCity seems to have answered classification of sectors. What about classification of commodity codes? So trade is recorded through commodity codes and services codes, and how are they mapped to the industrial strategy sectors? And then one for Richard, you mentioned the headquarter effect. So how are you managing the regional spread of data, or how can we use your data and manage that effect?
We'll we'll answer that question now because there were several questions in there and I don't want to lose track of them. So I think probably initially for you, Paul, do you want to answer Gemma's question about the commodities?
Yeah, so Anna might have some views on this as well. So, I mean, we have the trade data in our data set attached to the companies that are exporting, but we haven't got a alternative definition of what those goods are, which actually makes me think we probably could do some read across, because we know how the company's describing what they do on their website in terms of what their products are. We could probably create a lookup table which would then try and map that onto the codes that HMRC uses from an exporting perspective. So that's a great suggestion. I shall take that back to the office. Thank you.
Yeah, I mean, I could give an answer based on some of the stuff we've done, which I alluded to. So for clean technologies, there are mappings that have been used in the literature. So taking different products which are seen to be relevant for clean technologies. And I emphasize that because CCUS is quite an early stage sector. So there's judgment in terms of which types of pipes and things are relevant. And so we've done that, and in every paper we have a very clear kind of appendix setting all of that out. And often the process is done through, relying on other literature, talking to other academics who are looking at similar things, because there is this risk with any crosswalks that there are so many kind of decisions that need to be made. But it feels like, so I imagine that there's been some more efforts of those types of exercise in other areas. But then, of course, services is quite tricky, and we have industrial strategy services sectors where trade data is just more aggregated. So, and I think there have been some advances in that recently, but it's still much more aggregated than goods.
And everything, it will depend a little bit on what data sets you're using. So some data sets is not an issue. Things like employment is collected at the kind of branch level. Things like turnover and business survey, there are different versions of it around, like on the SRS, etc. So some have had adjustments made to try and make it easier for people to work at the local level. So if that's what you're using, then it might be about making sure you've got the right version of that partly helps you answer that question. There might otherwise be times where, depending exactly again what you're doing, may not always be necessary. Sometimes if it's, if most of the firms you're dealing with have single sites, for example, then it becomes less of an issue. But if it is going to potentially be an issue, then yeah, there are a couple of different versions of data sets which might be able to be used.
Thank you. Thank you, Gemma, for the question. And then a gentleman here.
Thanks. Really interesting presentations. Anna, I really liked the point that you had at the end on tech adoption. That's something, sorry, I should introduce myself. So I'm Sam Russell, I'm from DCIT, and one part of our department's about tech adoption, and I'm sure that looking at some colleagues next to me, I'm sure they'll be very interested in the work that you're doing. So perhaps I think you said it's about to be published, and I think after that, very interested to engage on that. Also really support the work that the ONS are doing on looking beyond SIT codes. It's something that for our sectors, a lot of them are emerging, and we really appreciated the engagement as we looked to revise and publish a new set of SIT codes. So really great what the ONS are doing on that, and we really do support that. My question is, you talked quite a lot about the quality, and I'm looking at this in terms of the trust, quality and value angle of these new statistics and these new methods. And there's a huge amount of value here. There's a lot of audience, there's lots of policymakers who really want to do this, but there's a trust and quality element of this. And you talked, Anna, about some of the quality sites and others. Paul, you also talked about this. What do you think, what would you say is the biggest thing that needs to be worked through on that quality to improve the trust in these statistics? Because there's a huge amount of different approaches here. There's lots and lots of statistics out there. And so what do you think that all of us who perhaps use these, that we should be articulating, or is there changes that we should be making? So that's my question. Thanks.
Thank you. I'm actually going to direct that to all four of you, because I think it's really, really relevant to all of your presentations. So just go down the row. Matthew, do you want to start?
Yes, I mean, two points I'd make. One is, I think, time series. It's really important that you try to build up data over time, because then you get the trust, because why is a perturbation and so forth. So actually making sure that they are data curated in a way and checked. If there's an error, you go back and check it, so you actually have a really stable set of that. The other question I mean, is confidentially is actually an issue. I mean, one of the reasons we find having our data so free and open is that people can then, get trust because they can see what it is saying. And I think the kind of regional level, people just don't. The data comes sort of from top down. It's sort of like manna. But actually, you want to work with it. You have to say, well, who is this? Who's done this? Who's the agent? So I think confidentiality is an issue which generally I wonder why. I have a lot of connections with Sweden, and the data availability of data is just quite different. The idea is basically your data, admin data and so forth, is much more available. And I just wonder whether we as British don't have a sort of a hang-up on the idea about everything's got to be confidential. It would actually improve the trust a great deal more.
Yeah, so just to build on that point, it's a well-known phenomenon that lots of economists, academic economists, end up working on Scandinavian data because of the quality and the linkage. And I think from a public policy perspective, if we had that data in the UK, we'd get many more high-quality papers on the UK. But broadly, I think to kind of build trust, one thing is consistency over time. The other one is consistency with alternative methods, which I tried to get at with those 3 different methods, which are measuring different things, but ultimately the message they're giving is quite consistent. And then the other one is transparency of assumptions and methodologies. So obviously in academia, there's been quite a movement to replicability, and with all the, lots of data science in GitHub, there is a lot of effort on transparency and setting out assumptions. But obviously there is also a cost to be able to audit that. So you need to kind of be proficient enough to do that audit yourself. But it feels like, even if it's just a report with an appendix setting out very clearly some of the assumptions, I think that's very helpful.
So I'll probably agree a little bit on this. I think the trust, we try to be very transparent in telling everyone about what our data is about and how we do it. And I think that's really, what we can do. Obviously, some people might, as the NSI, there's a lot of kind of work going on behind the scenes on things. So there's a lot of work on quality, and it's probably an entire presentation on its own. But I think, our being transparent is probably the main thing to do. And I think the confidentiality question is an interesting one, because it is something I was thinking about in the Cambridge example. Is the main difference there is we, like many NSIs, and Canada gave exactly the same presentation yesterday, data that businesses give to us is confidential, and we need to maintain that confidentiality. So, our statistics are built with that in mind. So yes.
Yeah, I mean, this is something that comes up a lot with conversations that we have with central government colleagues, and I think there is a push, I think, from some people concerned about that, which is, well, can you try and get a national statistics stamp on your data? Which is understandable. I think there's a lot of trust given in the ONS stamp. I don't understand why, and we do want to have an organisation that carries that trust as well. I think the confidentiality is definitely a problem in UK statistics. And hamstrings Richard and colleagues from doing what they do, because I think it makes that transparency more difficult, because they have to protect the data. And what that then means is that sometimes you will download data from the ONS or from other national statistics agencies, and the figure is just a figure. And you can't go and figure out whether that figure is the right figure or the wrong figure. But I think there's a lot of acceptance. It must just be right because it's from the National Statistics Agency. Now, that isn't always the case, because big data is hard to work with. I think the advantage of what you do get with working, say, with our data, for example, which is definitely not 100% right. It falls into the bracket of what Matthew was talking about in the previous session. Are we ever going to get 100% perfect data? Perhaps not. But it's the element of you're dealing with your fruit and veg, you're trying to pick out the bad bits. But what you're able to do as a user is we're providing you with data of 4.5 million legal entities that are operating, and you can go in, and if there's a problem, you can go and find that problem. So there's an element of the data source needs to be of good quality. It needs to be put together in a way that is transparent. But you as a user also, I think, have that responsibility that, right, we have all this data. How are we going to handle this carefully? Are we going to use that fruit and veg and other things to serve up a dish that gives people food poisoning? Well, I hope not. I hope you're going to sort of use that sensitively and, you know, wash your hands, etc., good data hygiene when you go to use it, so that if there is an issue in there, you can pick that out as well. So I think it's the element of the private provider has a responsibility, but certainly the way that we operate at DataCity, all that data is so disaggregated and open that if there is a challenger, you can go and find it and you can go and clean it. We try and clean up as much of that as possible, but we're never going to be able to do all of it. Which then I think leans on to how important sort of our community is with all this as well, because we put all the data together, we've done the best possible version that we possibly can do with the existing technologies, but nothing beats eyeballs on it. And we're always very grateful and always really encourage our clients, our customers, to be, if they see an issue, is to report it back to us for the benefit of the community so we can improve that for all.
Thank you. And thank you for the question. You used 2 or 3 concepts there: trustworthiness, quality, value. I think they've got a ring to them. There at the back.
Fantastic session, thank you. I'm Arnab Bhattacharjee from the National Institute for Economic and Social Research. Now, okay, so I'm going to focus a little bit on 2 related issues. One is on agglomeration economies, which we heard a lot about, and as you go geographically, spatially disaggregated, that becomes important. And the other question is about, well, uncertainty, really. Means it's more than accuracy, the way that I would put it, or typically statisticians would understand it, is uncertainty regarding the data. Now, agglomeration, so it's interesting. Giuseppe Arbia, one of the greatest spatial economists working in the area, said, well, you don't understand agglomeration economics without understanding the dissociation economics which surround agglomeration. So it is not enough to just focus on the places where things agglomerate. You need to understand that within the context of the entire spatial structure. And that becomes quite important, because if one does not do that, means I live in Edinburgh, and of course, I travel to London. Occasionally, I have to go to Manchester. And so if all roads lead to Rome, I would have to come to London and then go to Manchester. Obviously, that would be, misrepresenting the nature of what spatial linkages are. And again, if we do not understand those spatial linkages, then you place this enormous burden on the ONS by saying, well, every data that they publish needs to be absolutely accurate. Well, these are estimates. There are uncertainty bounds surrounding this. There must be a way of communicating that to people that, so this is the degree of uncertainty which exists, but you cannot do that without understanding the interspatial structure. So how do you deal with this is my question, actually. Thank you.
Anybody would like to?
I can take that. I think there's a broader point to answer the question that you were making, and I think this links into what Matthew was saying as well, is that I'm always very keen to push this, particularly in subnational economics, is that you can have the data, you can have more and more data, and I want more and more data because I'm an economist and I want to work with that data. It's a raw input. If I haven't got it, I can't answer the questions I want. But the data on its own is not enough. You've got to have a framework for being able to be able to interpret that data as well, which is where I think agglomeration then becomes very important. So to give you an example, if I put up some maps, and I've done this in presentations in the past, and I showed you a map of skills, of life expectancy, and of productivity of the UK, cut by local authority, what you would see there is a lot of variation across those 3 maps. And anyone's first reaction naturally will be, wow, look at all that variation, that's really bad. We've got to try and make all 3 of those maps all the same colour. Now, from a skills perspective and a life expectancy perspective, so education and health, in principle, there's no reason why we should see that variation across the country. I think that inherent intuitive feeling that there's inequality in the country and want to go against that, I think is right that people think that, and then there's something we can do about it. Because we could increase health spending in certain areas if we wanted to. We could increase educational spending in some areas if we wanted to, if we then believe that would then lead to better outcomes, which is a separate question. But they're basically the levers that policymakers can pull. But from a productivity perspective, A lot of people see that productivity map and go, oh, wow, the country is so different and so divided, we've got to try and make that map all the same colour. But the reality is because of agglomeration, we should expect variation on that map. We might not like the variation that we see currently, but even in a utopia, there should still be variation on a productivity map in the way that maybe you wouldn't see from a skills perspective or a life expectancy perspective. Why? Because different places play different roles in the economy. Now, expecting the map to be exactly the same colour on productivity is a good example of where we've got much better data, thanks to the work of Richard and colleagues over the last 10 to 15 years at the ONS. But without the framework in place to interpret that, you then can get led into some very different policy outcomes, which is where the whole cities and towns debate came from in the mid-2010s, for example, and probably will come back again. But sort of without that framework to interpret what you're seeing, you can get yourself into some positions that just don't really make a great deal of sense and reflective of reality.
Very good, thanks. Richard, do you want to come on?
Yeah, I was just going to add a little bit that we do. So obviously some data sets is like, here's the data by local authority, and then, there's not much spatial kind of evidence within that. But a lot of ONS data, if I'd shown more of our analysis, we are trying to, in a sense, show some of that spatial element. So we do have other classifications we use, other geographies, things like travel to work areas start to show that kind of urban thing. Yep. We have rural urban classifications. So normally when we are interpreting or giving out or analysing the data ourselves, we'll also be gradually, making these points. And I quite agree, importantly, on the productivity, it's vitally important to understand that, there will almost inherently be a difference between productivity in London and the very rural part of the UK. So yeah, I do agree. But I think part of that just comes in the way everyone works with the data and using, appropriate geographies, classifications, understanding the concepts that you talk about, etc., and then trying our best to make that message as well known as possible.
Anna or Matthew, anything on this?
I was going to make a point about linkages between places and spillovers. So I think, a lot of the analysis identifying what firms do, and also clusters, it's kind of thinking about firms and how they relate to other firms, but it's not necessarily looking at how they relate to each other through production or innovation. So some of the stuff we've tried to do is tracing spillovers and understanding. So, what one key result is that innovation within the Golden Triangle actually does spill over and benefit innovation elsewhere in the country, and then understanding the source of those linkages is really important.
Yeah, I have 2 points. I think one is, first of all, it's very clear when you drive into an area that there are differences of economic activity. And we should start from that position, that the whole economy, the whole country is not the same. We're therefore going to look for those areas where we've got the specialisms and so forth. The other thing that I would say is that we've sort of started to realise that the spatial development actually, you can see it happening. So, for example, one of the things we've picked up in Cambridge was that in the towns around Cambridge were actually rather dull in the about early 2010s, places like Soham and Ely and Newmarket and so forth. And then what we actually realised was that as the costs and the activity at the centre was growing high up, the white man van moves out. So we can now see where they've gone to certain kind of business parks at the edge of the economy, and therefore you've got to think how you deal with that as well. And therefore the whole issue about what is the move that you make with transport is absolutely crucial. And one of the concerns I've got about most discussion about transport is actually trying to link from centre to centre. And it isn't like that. It's actually the most important piece is actually the palmate bit, where it goes out from the centre outwards, because you're trying to end up with a kind of a well-balanced centre which is growing well. And just by simply putting in a corridor from somewhere, far east and west or whatever, doesn't really get you the kind of overall growth that you want in the centre. So it's an understanding about the way in which centres actually grow out and fall back in again, which is what's got to be understood as well as just a simple view there being that one figure for the whole country.
Thank you, Matthew. You did very well not to mention HS2 there, but I'm sure...
Well, I was talking East-West Rail, actually.
I don't know. Have we got any, any online questions? No online questions. So I think we've got time for one more question, and then maybe two, Sharada and the gentleman here. And then I'm actually going to ask each of you to just do a 1 minute summing up as well. But should we take Sharada's question?
Sharada Davidson from the University of Strathclyde. I think what I was drawing from the panel is that in some sense we're moving from an approach where we consider the ONS to be attempting to meet all user needs, to one where we actually think that alternative data providers can actually do a better job because they don't have that what kind of was referred to as a straitjacket in terms of quality, in terms of comparability. But I think that can lead to a number of issues, especially if we're thinking about our very resource-constrained stakeholders, the ones who can't really identify whether carrots are moldy or not. So firstly, one issue is in terms of cost. So the cost of going to these alternative providers. Another one is that Anna referred to kind of different data sets, different assumptions. I mean, as a very resource-constrained user of data, how are you actually meant to choose between all of these different data sets? And then another issue is an issue of comparability. So it's something we've been talking a lot about, comparability, coherence. Does this not open us up to another issue around comparability and coherence? You've got different data sets which may not be comparable within a given UK nation, and then across the UK this is amplified as well. So I think I'd be interested in, I know that you were mentioning there are discussions taking place between ONS, between these alternative data providers, but to what extent do we need to actually be looking ahead and preventing these issues building up if this is actually the new model we're working towards?
There's a great range of issues in there, but I think we take the question here, and then I'll ask each of you to reflect across those questions.
Many thanks to all of you. My name is Luc Staal. I'm with the Potsdam Institute for Climate Impact Research. I'm not a very good cook myself, so it'll be about the ready-made meals. So in climate research, we like to shop very much internationally, and so my question is about that, perhaps mostly directed at Richard Protheroe. One of the opening remarks by Mr. Humpherson was that there's a shift happening from more standardized methods to, and I guess yesterday we heard a lot about integration of newer methods. And my question is, will that be changing anything, or perhaps already, to the international comparability of regional statistics, regional accounts, but also perhaps in the sectoral disaggregations or how they are measured? So will there be changes, given these new alternative data sets, to international comparability? Thank you.
So I'm going to ask each of you to reflect on those questions and also make any final remarks. I'm just go along the panel, starting with you.
Okay. Well, I mean, the thing that strikes me is that the ONS is surrounded now by an exploding landscape of so much other data sources. And I think one of the things that I've noticed in the conversations here with the ONS is a readiness to work outwards rather than being defensive it was initially. And I think that's important, that actually we do work together to work up this data. It is not going to be easy, and we have to build our expertises in doing this. But I think it's really important that we do actually, as a community, work collaboratively and work out where the errors are and where the gaps are, and then say, okay, what's the best view we've got? But I think that kind of getting rid of this idea that we're a series of high priests who have, as it were, the blue light only of the ONS, I think that's changed. And I think we've got to recognise that and then say, right, we're prepared to be involved. And then cost. I mean, what struck me about what we've done in Cambridge Ed is how low cost that is. £50,000 to have a full detailed data analysis of your regional economy. Companies should be doing that quite regularly and then say, we want that data. They pay for it.
So I guess what I have in mind is the costs of alternative providers. I mean, in reality, so yes, anyone can go to the ONS website and download an aggregate, but there are costs with working with microdata, and those costs are met by, you have to become an approved researcher, you need to be working at a university or an approved institution. So there's always been costs of working with data in a rigorous way, and I think that there's also a key role, obviously, for the academic community here, and not just in terms of the analysis, but I wasn't at the previous talk, but I think it was also talking about AI in research, and many researchers are now using AI to make their own classifications or their own measures. So this is a phenomenon that's happening. There's always been a need to invest to do any kind of data analysis. A license with a company is one cost, but getting a research assistant or a research program going is another cost. So I think, again, I would come back to looking like the sense checking, the understanding, merging data sets together. I mean, even with the DataCity, you have company's house and you have SIC codes. So like you actually have traditional classifications as well as your classifications. So where possible, being able to have those layered databases really does help.
Thank you, Anna. Richard.
So I think, I think as politely as I could during the presentation, I was trying to kind of make that point that it's not only ONS who have the challenges when you work on these data, and as pointed out there's a cost to everyone trying to work with the data, and you have to look at the pros and cons and etc. So ONS does have as long-standing rigorous methods, and it's not just a case of okay, someone else can just bypass all of that and give you a magic number. That's not kind of how it works. Everyone who is looking at other data sources to go with ONS's data, they all have to be, really looked at rigorously as well. So, I do think it's kind of a case that, ONS's data, will hopefully continue to be, a really important part of the environment here, because, it does do a huge amount, and most of the panelists have talked more about complementing it rather than, necessarily trying to kind of replace elements of it. So do the international one now?
Yeah. Very quickly. On
the international point, I think, so I've been the kind of OECD rep for quite some time. So I think the reality is there's always, that kind of stuff's always happening. So having been to like OECD meetings talking about regional, people in the room, different countries are always at slightly different stages. So the methods will slightly differ, on things, OECD and the EU, et cetera, try their best to try and, get the geographies as compatible as possible, try and get the data as compatible as possible from everyone. But ultimately, there's always a little bit of kind of difference. So in a sense, it shouldn't really matter. It won't be any real difference. So if some area moves a bit quicker than another country, that's not too dissimilar to how it's maybe always been, that there's always kind of been some slightly different methods, and timelines within it.
Thanks, Richard. And Paul? I'm going to throw in another analogy to finish off in that case, and that is one of TV channels. Once upon a time, we had one TV channel, and you liked it and you lumped it. And now we've got a whole range of TV channels of all different subscription costs. Some are good and some aren't good. And it's up to you as the consumer to decide what you want to buy and what you don't want to buy, what you're interested in, what you're not. If you don't like sport, you're not going to get Sky Sports, you're going to get Sky Arts or whatever it is, or Netflix or whatever it is that you wanted to get. And it is up to you then to make that decision, I think, amongst that broader choice. But I think ultimately broader choices, we would probably say, is a good thing rather than a bad thing. On the cost, I face this, again, not another subscription channel that you've got to pay for. I can't possibly pay for all of them, but I do pay for some of them, and I decide where it is I want to pay for them. The big challenge with the TV industry, you could argue, is that maybe the BBC hasn't been as well funded in recent years, which is why then people have had to go off elsewhere. I think that exactly reads across the statistics in the UK and elsewhere, where national governments have been cutting statistics budgets back. So I think we sort of have in our mind that the ONS or whatever, the BLS or whatever in other countries don't cost any money. They cost a huge amount of money, and we do need to fund them. And as taxpayers, we need to fund them, and we need to realise that in order to get good quality statistics, you've got to put money in that. Now that might be through tax money, or it might be through you paying for private providers, but that cost is not free. Building on Anna's point, we mustn't lose sight of that. Then in terms of comparability, I mean, this might only partly answer your question, but certainly gets to your question. We are currently based in the UK, or only produce data on the UK, but soon we'll be doing it for the US, France, Germany and Ireland, and then we'll be expanding to other territories as well. Our approach will be entirely consistent across all of those geographies, which then means that you have what we think are the most comparable statistics on businesses across all of those jurisdictions of anybody, anywhere. And that is particularly a bonus because even within the industrial classification system, there are differences within different countries, even though they're trying to align them, which means that they're not directly comparable. And we think the work that we'll be doing is that if you wanted to have a definition of companies in the USA using UK standard industrial classifications, we will give you that. If you want to have a definition of NAICS, the North American approach to industrial classification for UK businesses, we will give you that. So you can directly compare those sector definitions across those different geographies. And it was part of the reason why I joined DataCity, because I think that's really exciting.
Brilliant. Thank you. I'm very sorry that I've kept you all so long from your lunch. The one thing I would say that I take from all of this is a verb, and the verb is augment. Taking national and internationally consistent data sets and augmenting them with these alternative approaches. I think we're in a world of augmentation. I hope you will join me in thanking our speakers for a really stimulating session. Thank you.